Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. We're going to be doing something a little bit different. It's the end of the quarter, end of Q3. We're going to be looking at quarterly charts, something that most traders don't look at. These are very powerful charts to look at and use in your trading. So let's start with a stock that's in the news right now, and that's eBay. eBay, you probably know, is going to spin off PayPal, and this is a chart of eBay going back to 2006 on a quarterly basis. Now you may notice we've already have an indicator in here. That's the parabolic stop and reverse indicator. And how you do that is very simple. You go to on chart studies and you click it. You can click it off like that, it goes away, or click it on, and you can move this around to various categories. But I typically have it set at these categories: 0.2 on the bottom and 0.08 on the top. So it's 0.2 on the bottom, 0.08 on the top, and you can always reset it to the defaults, which is right there. And if you want to know about this particular study, you just click here and it tells you all about the parabolic stop and reverse. So let's just go back to the studies that I want. That's there, and we close this up and we've got what we want. So this is a simple idea that you can use to perhaps filter your trades even more. And how it works is like this. So looking at the parabolic, you have these little dots right here. You can see them. When the prices go below that, there's a dot there. When they go below, like right here, you simply say the trend is down, and you can see how the trend did go down, and the little parabolic dots are on the top, and then eventually the market reverses, and so on and so forth. You can see how it works. And you can see how this has been the case with eBay, that it's really been in a positive uptrend since it moved over this level in July of 2009. So it's been always in a solid uptrend. Now you can do this with all the markets, but I want to show you how it looks on the indices, the Dow, the S&P 500, and the NASDAQ. So let's move on to them. Here's a look at the Dow. You can see pretty much very similar pattern. You have the little parabolics here. The market goes below there, goes down, and then it moves over the parabolics, which is right here, and then it goes up, a little shakeout right here when you can see the market just went below there, indicating one, and it was quickly reversed the next quarter, and then the market continued up. Now the big number here on the Dow is going to be 15,141. Okay, that's the number. If the market goes below that level, it's reversed to the downside. So that's what you want to look at, 15,141. Now that'll change next quarter, but for quarter number 4, Q4, you want to have that number written down somewhere. That's a big number to remember. Much the same pattern on the S&P 500, and the number there to look at and remember and write down is this number right here, and that is 1,682. Again, if the market goes below this level on the index, then you want to be short or totally out of the market. That's not going to be a good sign. It's going to be very similar to perhaps like this when the market crashed. Lastly, the NASDAQ Composite Index is pretty much the same pattern there. You can see how the parabolics work. A little fake out there for everybody, then boom, came right back up, very strong, and the number you want to remember there is 3,706. Okay, that's the key level for the fourth quarter. Remember that number. If the market goes below that level, you want to be out of the market or short. Now here's an interesting one. I'm looking at gold, spot gold going back to 2006, and I want to share with you exactly how this worked. So you can see the trend was clearly up here. There are the little dots. Went reverse, so the market also just went sideways, and then from there on it had a steady move up till eventually it moved down right here in 2013, and it really hasn't recovered. Now what will happen, in my opinion, if we continue to move sideways like here, then these lines will come down dramatically. But right now for gold, it's 1,669. That's the number that gold has to go over to turn the quarterly charts positive. Silver, a little bit of a different picture there, because silver actually topped out much earlier than gold. That was an early indicator. You can see the parabolics right here. reversed here, and you can see how we've gone down from, let's say, the 25 level to just below 17, which is a big move, and you can see percentage-wise what's happened. But it never, even though he went sideways here, it never went over the parabolic, which is right here. Seeing a very clear line there. So the trend is down in silver and gold longer term. Now that's not to say we won't see some little bounces and jumps up, but longer term it's still looking negative according to this indicator. You've probably been hearing that the dollar has been very strong, and it has been very strong this quarter. As a matter of fact, you can see this quarter it went over the parabolic, indicating a trend that was upward, and you can see last time we did that was right here, and we sort of went up a little bit, but really not too much. This market has really generally been flat since 2006. Not much going on, but the key thing is if we break over these levels here and close over these levels, then we could see another quarter that's very strong for the US dollar. So that's how you use the parabolic in MarketClub on the quarterly charts. It's a very good indicator that you can use to perhaps filter your own trades, and you simply go to on-chart studies. You can turn it on or off very simply. You can adjust the numbers, but for my personal trading I like to use 0.2 on the bottom, maximum acceleration, and the acceleration here is 0.08. That's it. So I hope you enjoyed this lesson, and every success using this technique with your own trading. Ask about any market and get an answer. Only for members and only from MarketClub.com.